Hey all you hustlers out there, today's video is for you. I'm walking through TurboTax's version of the self-employed section. You can actually start in the normal TurboTax filing and then upgrade to the self-employed section when you start to add that self-employment income. Whether or not you have a regular 9 to 5 and just have a side hustle, or if you are completely employed on your own in your own business, this is for you. Don't forget to like and subscribe, gather all your receipts, grab some coffee, and let's go. When it comes to self-employment, it doesn't have to mean that you are fully self-employed. Anyone who is working anything on their own through some kind of app where they're contracted or they're just kind of freelancing, putting their services out there and getting paid by someone other than their own company. And when I say your company, I mean a formal company that is paying you and giving you a W-2. So if you do anything like Uber, any kind of rideshare app like that, if you freelance work through things like Fiverr, or even if you are doing YouTube like I am now, you would be considered self-employed because no one is formally paying you through a W-2. Instead, you kind of get these income statements from these separate vendors, but they aren't actually your employer. So Uber might send you a form showing all the money you've made, but Uber actually isn't your employer. You're considered a contractor. If that applies to you, you have to look at the self-employed option for your income. And like I said, you can have more than one avenue of income, and you could be actually employed normally and still be self-employed at the same time, or just self-employed, depending on your situation. If you have any kind of self-employment income, it's going to be under this wages and income tab once you log in. So we're going to go and review and edit our wages and income. If you're in a different section of TurboTax, you can see it on the side here too. So just make sure you're under federal and wages and income. And there's this wages and salaries, and that's where you're going to put any of your regular W-2s, like it says here, form W-2. If you have that normal job, you have a W-2 to enter, you can stick that right there. Otherwise, there's the self-employment. It's going to fall under Schedule C, and it's any kind of these forms here. 1099 NEC, 1099K, anything like that. I'm going to hit Show More, and we're going to start. And so it's saying, do you have any kind of self-employment income or expenses? Like I said, freelancers, independent contractors, on-demand services, and small or home-based services. And you're going to say yes, because this does apply to you since you're watching this video and trying to figure this out. Tell us the type of self-employment work you do. I'm just going to put in my information here. Let's say I do YouTube and content creation. Who did this work or own this business? I'm going to say I did and hit continue. We need a little bit more info. So they're going to take whatever you put in and they're going to try to figure out what you did there. So is it videography, online publishing, writing, website development, advertising, or none of these apply? I'm going to say videography just because it kind of applies. Obviously, it's kind of hard for TurboTax, even though they're pretty modern, to get exactly what it is that we do. I haven't seen like a content creation work listed up here ever yet. Maybe it's different for other people based on what they enter, but that's kind of the closest thing to what I'm doing. So obviously I'm not recording other people and making creative like videos, just recording and making those videos, but that's close enough for me. So I'm going to say continue. Is it a main source of income, a side job, a business, or something else? I'm going to say it's a side job. Tell us how long you've worked in videography. So depending on when you started, it might be able to pull information for you if you put it in your taxes the year prior. I didn't start or stop this year. I started really actually in 2021 when I started getting paid. So even though I started earlier, I didn't actually get paid till 2021. So I'm going to say this one because these apply only to 2022. Did you make these payments for videography work? This is going to be talking about expenses. Did you make payments to a contractor? In my case, I did not pay anybody else. Or was I required to send a 1099 form? If you're confused and you're like, I don't know what this means, that means you probably didn't do it. So just hit no. If you did pay someone for their services in order to do your work, then make sure that whether it's $600 or more, or you fill out that form, that you hit yes. But I'm going to say no, I did not. Any of these less common situations, do they apply to you? I didn't actively participate in the operation of this business. I am subject to Department of Transportation hours of service limits, or none of these apply. Again, if it doesn't make sense to you, it probably doesn't apply. In my case, they don't. So it's summarizing everything here for me. I'm just going to say it looks good. Enter the income for your videography work or whatever kind of work you're doing. If you received a Form 1099 NEC, this is for anyone, any company that hired you maybe for contract work, but you aren't actually employed as a regular employee, they would give you this form. Or 1099Ks come from companies like Uber and DoorDash. Otherwise, if you just kept money, if you got cash, if people Venmoed you, if all this other stuff, and it's not tracked formally in any kind of business setting, then you're going to hit other. Or if you got any of these payments, less common, but that doesn't mean it didn't happen. So I'm just going to say other for this sake. Do whatever fits you. And I'll go back and show you the other ones as well. Now it's asking to break down what it was. So type of income and amount. Let's say for this example that I received cash from someone to make a video. I didn't, but I'm going to put it in just so you know, and I got $500. And then I could add another row. Someone paid me a check. It was $600. And obviously you don't want to make this up. This is why we keep receipts, because you want to have a receipt of everything that was paid to you or that you paid out. So once you add all of your income, you would hit continue. And it's going to say, this is how much you made. Obviously, I don't know if you saw that this changed up here, but this is going to show the total amount that you made. And then it's going to continue onto any kind of expenses that you paid out. So do I have any more income to add? I'm going to say no. And now the expenses, like I said, and this includes computers, tablets, video camera accessories, business cards. Again, don't just stick things in here. You're going to need a receipt for each and every one of these to hold on hand in case you get audited. That's one of the really great things about these days, is that technology is so advanced. You can just go online and grab a receipt. Let's say I bought a mic on Amazon for, $80 or something. I could go onto Amazon, even though I didn't keep it originally, pull up that receipt and then claim it as an expense because I mainly use it for my business. If you use it for everyday and other things, mainly not for your business, then you won't be able to claim it. But if it's mainly used for your business, or used exclusively for your business, then you are able to claim it. The big thing here is that if you have enough expenses, you're going to get deductions, you're going to get tax breaks because of everything you spent, and it might even outweigh the amount that you made. So if you have an internet or phone bill, if you drove around or have vehicle expenses that incurred for your business, or you have home office that you only use for your business or you mainly use for your business and not your regular job, you can ask for these deductions, but you will have to upgrade to self-employed. And so for me, there is no right or wrong answer. It's really up to you. Obviously, if you continue and you upgrade to TurboTax as self-employed, you get charged this 119. And I know people freak out and they're like, well, they're making me pay money to get these tax breaks, but odds are if you had a even semi-successful business and you earn a decent amount of money that you're going to have to pay taxes on, you're going to want to make sure that you upgrade so that you get credit for all these other things you paid. Odds are you probably paid more than $119 in an internet and phone bill. Internet and phone bills are so expensive these days. I don't think there's anyone out there who paid less than that for their internet and phone bill if that was mainly used for their business or mileage, or if you have a dedicated home office, then you're going to get this back. And I think that's always a rule of thumb is, did the costs you paid outweigh this actual cost? And odds are it probably did, but it's up to you. You can decide what you want to do. I'm going to say upgrade to self-employment just to show this. Okay, so they're saying, you can connect all of your accounts or you can type in your expenses. For this, I'm just going to type it in. TurboTax is just asking you why you're choosing to do this instead of connect all your accounts. I'm just going to say that I can find all my accounts on my own. Again, you can totally go ahead and connect all of them. In this case, for ease's sake, I'm just going to do this. Okay, now it's just going to have you go through all of them. I'm going to have you each go through your own. Obviously, not all of it applies to everyone, so I don't want to confuse anyone. But if you had business insurance, check. Assets, larger purchases more than $200, and they have examples. And if you ever get confused, click on those examples or does that apply to me? If you had a computer, tablet, CRM software, video editing software, I'm going to say yes to this. If you traveled for business, again, examples there, legal, meals, equipment rental, meals, again, and the difference between these two: meals during business travel, meals while conducting business, meals at a seminar, conference, office snacks, other meals expenses. These things are only going to give you a 50% deduction. So let's say you spent $500 on these meals during business travel during the year. They're only going to offer you a deduction up to 50%. Depending on what you qualify for. And then these meals, business meals purchased at a restaurant or other meals, they can cover up to 100%, depending on your situation, but it's up to that. And this one's up to the 50. Any supplies, office expenses, anything like that. And obviously they've already marked these to be kind of geared towards me because I put in videography. Yours will probably say something else if that's not your field. And then there's miscellaneous expenses. And so for now, I'm just going to show you how it works. I'm going to say assets. They're all going to work pretty much the same way. Like I said, don't put anything in there that you don't have a receipt for. There are also less common items. That doesn't mean they didn't happen. Building rentals, commissions, communications, advertising, contract labor, and then actually keeps going. So if you can't find it here, search for it here or keep going. But you know your business better than anyone else. TurboTax is thinking. Okay, did you have business insurance? Yes, no, I'm not sure. I'm just going to put down no. Did you travel for work? I did not. Answer these to however it fits you. Okay, so you can import transactions or add expenses. If you need to add more income than what you already added earlier, you can. You can edit the business summary and then start any uncommon situations like unused expenses, carryovers, non-depreciable assets, all that's good stuff. For this sake, I'm just gonna do add expenses for this work so you guys can see how it kind of pops up. For this sake, I'm just going to focus on the expenses I added, and you can see that I put down assets, and so you just hit start. Did I purchase anything that's large and depreciable, such as computers, furniture, or equipment? And this just means that, do you have any large purchases that the value over time is less and less? Obviously, if you get a computer, because we make such new computers each and every year, a computer you buy today is not going to be worth the same amount of money that you paid today that in 3-4 years. In 3-4 years, it's probably not going to be worth much at all. And so this is, did you buy or already own anything? So it doesn't have to be something you bought this year. It could be something that is continuing to be used and continuing to depreciate. I'm going to say yes. Let's say I bought a computer. Did you buy any items for your business that cost less than $2,500 this past year? And so this is if you actually bought something, not if you had an item that's already depreciating. So if you did buy it, you're going to say yes and move on. If you didn't, then hit no, and it's going to go into depreciating those items for you. If you did, let's say, yes, I did. Yes, I have a receipt showing what it was, and yes, I want to take the annual election to deduct that from my taxes, and you'd hit continue. It's going to go through each of your items if you bought more than one item. If every item costs less than that, you would say this. If there are some that were above, some below, you did this. It's just going to break down each one because this is a little more complex. I'll hit this one so you can see what it looks like. Did you make improvements to a building? I did not make improvements to a building I lived in. Do you have any items in your business that we did not already cover? I'm going to say no. So there's this, and I can add each single item. I didn't yet, but I can add it. Let's say there was a laptop, there was a printer, there was, all this stuff I bought. I can add each and every one of those. I'm just going to go back really quick and show you guys the other options. So let's say that I do have items, but I didn't buy them in 2022. I bought them in 2021 or 2020, and they're getting older and they don't have that same value anymore. Then I would hit no because I didn't buy it in 2022 and go on. Then it's going to figure out if, how much these are valued at. And again, no, I didn't make any improvements to the business, the building. But I can add, describe this asset. It's a computer. I bought it in 2021. Describe, let's see, computer, desktop. Let's say I bought it for $800 and I purchased it in 2021. Did I trade anything else in? Did I just purchase it straight up? Was the item sold, retired, stolen, destroyed, disposed of, or given away? Let's say that I just purchased it and then I gave it away. I gave it away for $0. And then you could continue, and it's gonna kind of do it based on that. If you didn't and you're still using it, we can just say I purchased this asset and have you use this item 100% for the business you've acquired it. Yes, I've always used this item 100% time for this business, or no, I haven't. And I feel like this is, again, just my feeling. A lot of people who have side hustles, you're probably not going to purchase a computer just for your use with that business. Maybe some of you guys have. Most of the people I know who have some kind of side hustle, because it's a side hustle, because they're trying to make extra money, they're using that item across the board for everything. So I would do that. If you used it before for personal, and you didn't even get it for your business, there's that option. And then I used it, I first used this item at least part-time for business, but also use it for personal. It's a little bit different because the purpose was for your business, but you do use it from time to time for personal items. I want to say this is what most people I know do. Let's say I got it, since I bought it for 12, I'm going to say I got it and bought it, started using it for business on that date. But I use it about 80% of the time. Okay, so if you took this deduction last year, you need to put that in there, and it's going to calculate everything. It's even going to tell you where to find this on your last year's return or in the software that you used. If you didn't, you can just leave it blank and hit continue. And then it's going to ask you about this convention, MACRS, Macers. I don't know how you pronounce it. It's however you, I feel like when I say the word Macers, it just does not, when I say that, it sounds very unprofessional. So MACRS, that's long. If you use the half-year convention or the mid-quarter convention, if you're confused, it just says, if more than 40% of your business-related assets were first used for all your business in the last 3 months, then you'd choose a mid-quarter convention. So yes, most of my stuff, 40% of my business assets, were used for all my business in the last 3 months. So I'm going to do mid-quarter. If that's not you, if you only used a quarter of those assets for your business in the last 3 months and you started using it for something else, then you could do half year. Confirm your prior depreciation. So depending on everything you put in, it's going to pop out a number here. And honestly, if you're unsure, I would take the number they've given you. If you are great at calculating depreciation and you kind of know you want to do something else, you can, because that is not my area of expertise. I'm taking what TurboTax is giving me and leaving it at that. And it's just showing you how much value has gone away from the item that you own. In this case, it was my computer. This is just showing my estimated expense for this asset, 192. And say it's listed here now. You can add more, you can delete the ones that don't work for you. I'm going to delete this one, and you hit done, and it's going to summarize everything you've done, expenses, income, like I said earlier. If you're done, I'll just show you how it works, but you can already see here, it says your taxable income is $192 lower because I added in that expense. Obviously, like I said earlier, it's going to cost me through TurboTax $119 extra for this TurboTax self-employed version. And my taxable income has already been lowered by 192. So that evens out itself, and I only put in my computer and the depreciated value of that. If you have other items, the odds are your taxable income will be lower by a lot more than just that 192, like I have in my example. Let's just say that again in big and green letters so that I'm happy about it. How much of your work took place within the United States? I'll say all. If yours is different, you can do that. Was it for a former employer? I'm going to say no, it was not. It's my hustle for myself. Okay. Do you have deductions for videography that you'll claim somewhere else? I'm going to say no. If it's you, you can say yes, but I'm not going to claim this anywhere else. Okay, now it's saying you're human, we're going to run a check, and the risk that I will fail my audit is low, so that's great. Any other self-employment work, yes or no? I'm going to say no. If you worked for, like I said, multiple things across the board, you can go ahead and do that. So if I wanted to add something that was not videography, I could add it now. If I also worked for Uber, then I could stick that in because it's a different line of work. I need a different line of self-employment work in my taxes for that. I'm going to say no. And there you see it. There is all my income that I've put in this version of TurboTax so far anyways. My self-employment income and any of this from PayPal or something else. Regular wages would be right there and you could revisit it. But you can always edit, add, whatever you need to do. That is the self-employment section of TurboTax. TurboTax is smart in the sense that they upcharge you for the self-employment thing. But like I said, when you think about it, at the end of the day, it's good to look at those expenses. It's good to include those expenses. Yes, the upgrade costs money, but we all know you paid something for your business and you want to make sure that's included and not just you reporting your income. So take full advantage of that. Like I said, by law, you're supposed to report your income anyways. You might as well pay the $119 there to upgrade and talk about your expenses so that eventually it'll all even out and you will be just fine. In my personal taxes this year, I did it myself and I did include I did upgrade to self-employed because I was paid by YouTube. I was paid enough that I wanted to look at my expenses. And so I upgraded, put in my expenses, and everything did even out. I actually, with my tax situation, it worked out great for me and I was able to get more back than I originally had hoped. So again, every tax situation is different. I know everyone's kind of like, I don't want to do it because it's more money out of my pocket, but I really do think that it pays you back. I'm not sponsored by TurboTax. I am not promoting this because I'm getting any kind of money from them. If I did, I would put it in my self-employment there. But I really think this is a great option for people who are hustling for themselves. Do not cut yourself short by not putting in your expenses. If you have no expenses, I have no idea how you're doing that. Let me know. That's great. I want to get on that train. But odds are you have expenses. Take credit for all of the hard work you've put in and what it has cost you. Before I go into any more babbling, I just want to say thank you. I know the tax season is coming to an end here. I'm so excited for all the huge refunds or small, hopefully small amounts that everyone has to pay. If you have to pay anything at all, I'm proud of all of you guys. Subscribe, hit that notification button, and I will see you guys all in the next video.